Good afternoon, everybody. I'm Heath Birch, and I'm the Director of Wealth Management here at CommunityAmerica. First, want to thank all of you for taking some time to join us today. A little background for those who are on this and unfamiliar with wealth management inside of the credit union. We're the team dedicated towards providing financial planning services and wealth management solutions to members of CommunityAmerica. And early last year, we started the process of offering these quarterly webinars, really in an attempt to provide investor education and just information around topics that may be top of mind for a lot of our members and clients. Much of last year, these centered around COVID. Later in the year, moved into the election. And as you can tell, sometimes there's passionate opinion on both sides of those issues. And so first wanted to mention today that our intent really here is not to take a stance on an issue or promote that something's appropriate for all of our clients. What we'd like to do is take a topic and provide some useful information so that as you make decisions for your family, you're in a better position to do so. ESG investing, or environmental, social, and governance investing, is something we're asked about a lot. It too has its proponents and those who question its validity. And so what we'd like to do is kind of clear up the confusion around that and offer ways in which you can access these types of investments and make decisions again for your own family. The reason why this topic is being presented is because we're asked about it a lot. Throughout our advisor group, it's a point of conversation with existing clients. It's something we hear from members on who are looking for more information or wonder if it's something that should be involved in their portfolio. And so today we just hope to have a casual conversation with an expert and walk through really in three parts. First, what is ESG investing? From there, we'll try to talk through how do you actually invest in this area if it is appropriate for you. And finally, personalize it in a way where maybe as a family, you can decide if it's something that you want to include in your portfolio. So to do this the right way, we wanted to make sure we pulled in somebody with the necessary background to provide some guidance here. I'd like to introduce Alexandra Russo with Allianz Global Investors. She's both a vice president, but most important for this, she's a product specialist in the global thematic equity area, which just means that she spends a lot of her time both in research and working with clients and advisors in this space. So it was a perfect candidate to kind of talk through this with us. So Alexandra, thank you. I appreciate you taking some time to join us today.
Thank you so much for having me today. And good afternoon, everyone. I look forward to an interesting conversation on sustainable investing, a topic I'm quite passionate about.
A great fit for this, just in a little bit that we've talked. I'm excited to unpack this from someone who's seen all sides of the issue and been in the space for a while, because I think you can pick up information and like I mentioned before, there are those who are very passionate about it and others that question it. And I think some of it is just maybe accessing information or finding consistency in how these types of investments are measured. So maybe we can just dive in first and try to help define what it is. You know, you can break down the E, the S, and the G, and you can come up with a list of about 30 different things that may fall inside of that. But if I were to ask you to define what this style of investing is, how would you answer that?
Sure. So from my perspective, I prefer to use the term sustainable investing over ESG, because I think as an industry, we've done a great job of overcomplicating something that is quite simple at its core. So from my perspective, sustainable investing is just a means of investing to get a competitive financial returns, just as you always have, but now to get something more from your investments, to get perhaps an environmental or social value add from your investments. ESG, or environmental, social, and governance factors, just allow us as investors to gain a better understanding of the companies that we're investing in. And then we could take a variety of different approaches in constructing strategies which allow us to meet a variety of different both inputs and outcomes. So depending on what your financial or values-based goals are, there's likely a strategy out there that falls under the sustainable investing umbrella.
That helps. I feel like as an advisor that over 20 years, these questions have changed for me. We started off, and I think it was oftentimes a client who just wanted to exclude certain areas. And so I won't pick on any sectors, but they could say, I don't want to be involved in this. I feel like it's migrated some, and it's maybe in part because there used to be this concept that to be in this space, you were going to sacrifice returns. And that hasn't necessarily been the case for quite some time. And so now it's turned more into someone who says that if I'm going to invest, I want to invest in maybe what's important to me as a family. And I think that's changed the whole conversation around what this even means to clients. Is that fair?
Definitely agree. I think sustainable investments allow us to better align our portfolios with any personal goals that we may have. And we no longer need to look at our investments in isolation of any charitable goals that we may have. So, sustainability, at the very least, allows us to construct portfolios that don't negate any of our personal goals or investments. So, say if we're quite passionate about addressing diversity related issues or environmental issues, we don't want to be investing in a company that is a worst offender in one of these areas. Sustainable investing allows us to do this, but then it allows us to go a step further. So, if we are quite passionate about the environment, for example, water scarcity, we can actually find a portfolio which focuses on exactly that, investing in solutions to water scarcity. So again, tons of options out there, and it's really about what you're looking to achieve both personally and financially.
I would ask you a question, but I don't think it's fair. So I'm almost going to answer my own question. I think sometimes we try to define so clearly what this is. You want to populate a list of all the things that it is or can be. Almost seems unfair. I feel like this is a more personal conversation with the client, that if there are things that are important to them, there are now tools to invest in that space that maybe didn't exist 20 years ago. And so it's less of a box that you check that you have to have in your portfolio, or that you have to do as a part of your overall investment strategy. It's more at an individual level, what is important to you. I have clients who this is the only way that they would invest. This is the absolute, and it's above any other directive. I have others, frankly, who are turned off by it. And I think part of the reason is there's the need for just, I call it organization in the space, or structure in the space, defining what a sustainable investment is. So the example you just gave is a really good one. If you have a company that you're trying to measure their culture and what good they may do for the community around them, that's a difficult thing to do. So are there ways now that investors can look at these different types of investments, I'll call it a rating system almost, that they could trust that there is a filter being applied to all the different investments available to us? And through that filter, we've determined that these investments fit the sustainable mandate.
Sure. So again, it's going to depend on what the strategies, outcomes, or goals are. What is the philosophy designed for? I would say one of the most common approaches to sustainable investing is getting exposure to, say, the equity market, say the US equity market, just as you always have, but I want to invest in companies that are, quote, sustainable. So what we would do as an investment team is look at each and every company's environmental practices. So are they disrupting the environment in their supply chain? Are they sourcing materials from areas that are, again, disruptive to the local environment? Are they treating the employees fairly within the supply chain? Does the board of the company itself have strong practices? Is it a diverse board? Is it an independent board? And the companies that are focused on what we call best in class ESG, so it's essentially the ones that stand out within their industries over the practices I've just discussed, can be found in one single portfolio. So you can then have a equity solution, but you can have one that is truly sustainable at the core of your portfolio with little tracking error to what you're used to getting. It's very similar financially.
I think I'll give a little credit here first, because this is not something I had picked up on, but you'll have clients who will ask, is this truly a socially focused portfolio? Is this truly a sustainable portfolio? And I think it's a fair question, because I think sometimes investments can be pitched as something that they're not. And so our marketing department came across this and laid out for me all of the different rating agencies that are now available in the space. And I'm curious, so how do you decide what to use? How do you decide what filter is appropriate? If this is important to a client and yet they're skeptical they're getting what they're asking for, how do you kind of cut through the noise of these different filters and rating agencies, or just do your own research, maybe, as a way I'd ask the question? How do you really confirm you're getting what you want?
So on the investment side, we find the third-party ratings providers very helpful, but really just a starting point. So the ratings providers can help us gather the ESG practices of all of the companies that we're potentially looking to invest in. It saves us that first step of gathering that information ourselves. We look at that as facts. but we do feel it's important to go further than what one particular ESG rating agency says. So, for example, outside of the ESG world, you may be familiar with, say, credit ratings, Moody's or S&P. There's a lot more consistency between those two ratings providers, about a 0.9 correlation in their scores. The ESG space is very different from that. The two largest providers in the ESG space only have about a 0.2 correlation in their scores. So it's really important that the investors go beyond what the ratings providers are rating these companies from an ESG perspective. So we like to gather the facts on our side and then determine what is actually material to this particular company as it relates to E, S, and G. And then we come up with our own proprietary scores for these companies, which we then utilize to construct the portfolios that you're investing in. So from your side, I would just encourage you to be sure that the strategies you're utilizing are not just relying on third-party ratings at first glance, but are really digging deeper and perhaps even taking an active approach to investing.
That helps. You actually walked me into the next area I wanted to get into. We could probably sit here and try to define what it is for an hour, but I think that gives us a good starting point. For someone who says, okay, I think I understand what it is, and now I'm going to grapple with whether or not this is important to me to put into my portfolio. The question is, how do we access this? And you started walking down a path there of looking beyond, the marketing slick and the rating agencies and relying on a firm like yours or a relationship with an advisor who is doing some work on your behalf. And so as you kind of start to talk about how an investor accesses this space, you think about your more traditional client who's got a 401k and maybe an IRA or a brokerage account. The 401k world is coming along and we're getting there. There's maybe not a lot of options in many plans, but we'll get there. But for investor maybe that says, I've got a brokerage account and I'm working with an advisor and I now want to start to think about how I access this. Can you talk to us a little bit about the tools or the type of investment structures that might be available to an investor?
Sure. So we're in a good position today because the sustainable investing space has attracted quite a bit of attention over the last few years. To give you an idea, we saw 50 billion new assets flow into sustainable strategies in the 2020 calendar year. That was actually more than double the 2019 year, which was previously the record. So what this has meant for the industry is that now there are many different options out there in different vehicles to access these sustainable investing strategies. At the end of 2020, there were over 400 different mutual fund and ETF options that meet that sustainable mandate or criteria. So again, broad variety of options out there, and it's really determining what those values-based and financial goals are to construct your portfolio because the optionality does exist.
So with the access to mutual funds, and it's a space I'm sure that's growing, right? I'm sure there are new mutual funds and ETFs that come about every week in the space. Is the interest up to this point been retail investors, the clients that we work with every day? Is it more the high net worth space? Is it instead institutional investors and the retail space is late to it? I'm just curious where, you talk about the flows of money coming into this space, where are they coming from?
Sure. So I would say the interest is picking up across all areas that you've mentioned. The institutional space, I would actually say within the US is perhaps on the slower side because they have a bit more to deal with. So I've seen more interest pick up on the retail or advisory side, people really looking to incorporate personal values into their portfolios and to do exactly what I mentioned at the start. Be sure their portfolio is aligned with any charitable goals and what they're looking to achieve from a personal perspective. And the optionality exists, so we can go about doing that. That said, it's a journey, and we still have a long way to go. Looking at assets globally, about $1 in every $4 is invested in a sustainable strategy. But when we look at the assets and sustainability outside of the US, clients are much further along. Institutional clients are embracing sustainability in Europe, as are retail clients. And I think that that's the journey we'll be going on throughout the United States.
That's interesting to me. And so that says the clients we work with every day are maybe behind's not fair. We're not there yet. We're not in the same place maybe some international markets are. To tackle one of the big questions, at least I used to get, the question of performance. Is that part of it? Is there this perception that maybe performance is sacrificed? I remember very distinctly the first client that ever asked me about this. Inside that question said, I don't care about performance. And I can't imagine, like, most of us don't mean that when we say it, right? Most of us want to perform the best that we can. I think what that was that they were so passionate about this concept that they said, I think the performance may be bad. I'm okay with it. This is more important to me. We've moved beyond that, I think. But is performance sacrificed in any way? You're limiting this investment universe, but I guess the counter argument would be that there's been such a focus on this in recent years. There's a tailwind for this entire sector, right?
Sure. So that we have more and more evidence that you do not need to sacrifice financial returns by investing sustainably. I would say that that still is a concern for many retail clients, and I continue to face this in the space. However, what I would say is that the 2020 COVID year was a bit of an accelerator for the sustainable investing space. The performance concerns came before we had a market correction. So we had been living in a world where over the last 10 plus years, we were in a really strong equity market. It seems like everything was performing well. So those who are a bit more skeptical felt that maybe sustainability is just a nice to have in this environment. And when we experience some volatility or more challenging market conditions, it's going to go out the window. These strategies are not going to perform. What we actually saw at the height of the pandemic and the height of the market pullback was that sustainable strategies largely outperformed their traditional counterparts. And if you break this down a bit further, investing is about risk and opportunity. And ESG information just allows us to better identify risks of companies and opportunities that companies have exposed to them. So right now, social media allows information to be shared so quickly about everything and anything you want to find. So if a company is experiencing some sort of social scandal or a lawsuit, that's likely to have an impact on the stock price and result in some sort of material risk. Within sustainable investing, we're going to look at a company's social practices in order to find those companies that are less likely to experience such issues. Or for example, on the environmental side, if a company is significantly polluting the ocean and is going to have fines as a result of how they're operating their practices, that can also have an impact on the bottom line, helping us find those risks. Then thinking about it more positively, companies that are labeled as sustainable or that have strong ESG practices tend to also be focused on taking advantage of future opportunities as it comes to sustainable investing. So if we think about the transition to a low carbon economy, companies providing clean energy related solutions are likely very well positioned to thrive and to grow in the future state. So identify risk and opportunity is part of investing. So it only makes sense that sustainable investments have largely performed very strongly over their history.
So really what we're saying here is that because these companies they're scrutinized on things that most investment portfolios aren't asked to do, right? And that you're in fact uncovering other issues in the company that may impact performance. That makes good sense to me from a performance perspective. One of the things I think you said though was also that this style of investing proved less volatile over the last couple of years. Is it for that same reason? And don't let me put words in your mouth if I heard it wrong, but is it for that same reason that because there's this additional level of scrutiny, you're just avoiding some of those issues that may present themselves later that lead to volatility? Is that captured right?
Definitely. I would say there tends to be a focus on quality when it comes to ESG, and ESG is just a part of that conversation. That's going to provide a bit more stability. On the opportunity side of investment, that also provides a lot of stability because these companies tend to be taking advantage of structural drivers within the market. So again, as we transition to a lower carbon economy, a company providing solutions to clean energy generation or battery storage technology, we're going to need those products regardless of what's going on. And that tends to be priced into the market. So even when we see a correction, they tend not to pull back quite as much as, say, a traditional equity company does. It's not any type of predictor, but it's just more information that we have. A data point that I really liked on this was actually recently I was reading that, why is ESG important today? We didn't talk about this years ago, if it really is material to performance. Well, the markets have changed, and today, About 80% of a company's value is actually tied to intangible factors, which include E, S, and G. That was not always the case long ago. So we must look at items outside of the balance sheet when making our investment decisions.
Okay, so to try to bring this home, if I think we've gotten past the idea that this is not somebody picking a theme and simply investing in it. This is more philosophical change in some ways, that you're asking your advisor, or in turn the investment portfolio manager, you're asking them, it's like they're adding another layer. There's another layer of responsibility. You're asking them to screen companies in a way in which we didn't used to screen them. And so this is, in many ways, this is the direct contrast to index investing, right? There's more passive management, there's active management, and there's active management in this space, which it sounds like what we're saying is just maybe the next step or progression of that. And so for someone who, if I gave them that laundry list and said, here's all the different areas in which you might invest in sustainable portfolios, this is not asking you to say, I agree with all of them or I want all of them. There's the opportunity now with 400 mutual funds and experts like you. There's the ability now for somebody to say, this is what's important to me. These are the things I want to invest in, and then access that as a part of your portfolio. This is not to say, and maybe you or others would disagree, but for the typical client who's walking into this space, this is not to say they blow everything up and start over. This is them maybe starting that process of educating themselves, or having at least an open conversation with their advisor. What's really important to us? And that's not a one size fits all. That doesn't mean that every member that we serve is going to feel the same way about this, or should. This is that personal conversation with the family saying, okay, let's have maybe a more detailed conversation than we have had in the past about what you want to do with your money. And it all has to fit into a financial plan. There are goals attached to this money, but inside of that, what's important to you, Mr. or Mrs. Client? And from that, then maybe looking at investing in a different way than you have in the past.
I definitely agree. I think there's a lot of spotlight in the space, and there might be pressure to overhaul everything you've done in the past, and that's absolutely not necessary. You can essentially dip your toe in this space. You could carve out a single piece of, say, your equity exposure to something you feel quite passionate about on the environmental or social side, while continuing to do everything you always have done within the rest of your portfolio. Or you could start to pick different building blocks. A slice of your fixed income exposure can be moved to sustainable if you find a strategy that meets your needs. So it's finding that right approach for you and balancing the risk, reward, and opportunity that sustainability allows us to uncover.
Makes perfect sense. To me, where I think this has come is not the idea that this should be something everybody does or shouldn't be something. That's too black and white for me. It really is just justification for a more thorough conversation. I have the bias of saying you should have that with your advisor, and that's in part our responsibility. But let's talk about those that are carrying their own portfolios right now. Would you direct clients someplace or members someplace to say, maybe it's at a stock levels? We'll use that example you just gave. If somebody wants to be thoughtful about the companies they're investing in, and they're willing to do their own research, or they want to start to kind of educate themselves around the space, are there areas you would point them, or pitfalls you would warn them about? Is there any guidance you would give somebody as they start into this and maybe build up to a conversation with an advisor?
Sure. So there's some starting points that you can utilize, and ultimately tools that your advisor has access to that they should be able to essentially share. So there's a few metrics that we can look at when looking at a sustainable portfolio. One of which is the Globe ratings for particular investment strategies. So you may be familiar with the star ratings that are more financially oriented. A 5-star fund tends to be a strong fund. And the sustainability side, a 5 Globe fund can also be a strong sustainability strategy, and that's the highest ranking. That said, the pitfall to be aware of is, as you're having that conversation with your advisor, is to ensure that that 5 Globe rating is happening intentionally. Because that Globe rating is just a quantitative score that's seeing how the underlying portfolio companies score from an ESG perspective. Some investment strategies or styles lend themselves to stronger ESG practices. So just because that score today is very strong, it may replicate what the portfolio manager is doing for the strategy, but not actually the intention. And over time, that could change. So it's important to ensure that the mandate is sustainability or sustainable oriented by its nature, and to ask that question. And there is a indication of that within Morningstar. Outside of this, if you are interested in looking at individual companies, There's quite a lot of information out there. It can be a little bit overwhelming, but one of the ways to see if a company has a sustainable strategy and maybe taking the step forward is to look on their website and just to see if they have a sustainability report out there, corporate sustainability report. The leaders in the space are going to have this. They're going to talk a lot about what they're doing to evolve their company strategy. Just one tool out there that you can leverage. I would say Morningstar and doing some of that research on your own are good starting points in the space.
Okay. Well, last thing I want to throw at you then is as you talk about, I think an advisor's responsibility is to provide information to the point in which a client says that, of course, is what I want to do, right? Feed them the information necessary that they feel some conviction in the decision they're making. And so as we're trying to help provide that information, one of the things I think I'm hearing is there may be the perception that sustainable investing is you picking, water or solar power or whatever it is. And it can be that those ETFs and funds are available, but really what it is more, it's more bottoms up. It's the analysis of the individual companies that might build a larger portfolio and a client deciding that they want to apply that prism to their investing overall, right? It's not that they have to pick favorites necessarily. It's a philosophy in the way that they're going to invest. And so maybe what that leads to is for those who feel strongly about it, I gave you the example of my first client that asked about this. It was an absolute. It was what they wanted for the entirety of their wealth. That doesn't have to be the way everybody handles this, but it is kind of more of that bottom up. You're analyzing companies more broadly and not directly picking certain themes. I think probably in most cases is what's happening. Is that fair?
That tends to be the case. So the core of the portfolio could take on this philosophy, as it does help us get a better understanding of our companies. And then you can be sure that what's in your portfolio is not going against any kind of improper environmental or social practice.
For that, is there anything that I should have asked you in this conversation you think is an important theme or note to mention for our members who are listening?
Sure. So again, just to put a bit of spotlight on why all of this matters today. Why are we all talking about this today? I mentioned the data point about 80% of a company's value is based on intangibles. But how has the story changed and how have markets changed? Why is that the case? I think that a study done by the World Economic Forum does a great job of providing a bit of insight onto why ESG information matters so much today, why it drives stock prices. And when we look at the analysis that they've done over the last 10 years, so between a period of 2010 to 2020, they ranked the top 5 risks we faced as a global society, be it financial, environmental, or social in nature. And if I were to have this chart in front of you, what it would show that back in 2010, 4 out of 5 of the risks that we faced as a society were economic in nature. Now, as you move toward 2020, you would have seen, if you were looking at the slide, a lot more environmental or green and red show on the page. And when you get to 2020, 4 out of 5 of those risks are actually environmental and social in nature. If that really is the case, it only makes sense that we must consider these as investors in order to make sound investment decisions. So as the world is changing, our portfolios are also changing.
Thank you for that. I'm glad you mentioned it. Thank you for just making the time to join us today. That was very helpful. I know for me, so I would hope that it was for our members as well, but thank you for doing that.
Thank you so much. And thank you everyone for joining us today. This is a topic I'm quite excited to talk about.
Thank you. And for everybody on, thank you too for taking the time to join us. I received so many good questions before we did this. Those frankly, both for and against the concept. And I think what I took from this is that it is a personal decision. And certainly what I'm doing today is not advocating this fits for everybody. It's that, as Alexander just said, this is happening in real time around us. It is a part of the investment landscape. And so I think it's incumbent on everybody with their money to consider this and where it may or may not fit for them. So hopefully this information was a way for you to kind of work through that with your family or with your advisor. For those who have questions, to access advisors inside of Community America, would very simply just point you to communityamerica.com/advisors. If you want to have a conversation around the topic or other financial planning related issues, it's a great place to start. But again, thank you everyone for joining us today and hope you have a great rest of the afternoon.
Thank you.